We undeniably, unarguably have the most advanced tool to manage LP positions in osmosis. There is a very crazy kind of thriller story. 80% of all tokens voted, which is like $2.5 billion of value, like 25,000 accounts. You know, in military applications, you don't leak your entire tank design to the enemies. Why would you do this in strategies?
Welcome to the Bare Metal Podcast.
Hey everyone, this is Ship the Code from RoccoAX, and thanks for tuning back into the Bare Metal Podcast. Today I've got here with me Valio from Quasar, the co-founder of Quasar. Hello sir and welcome.
How you doing, man? I'm great. How are you?
Hey, what's with the room? Are you bringing back the empire or what? Where are you?
Yeah, I heard you're in Prague. I'm in Vienna, so I guess this is happening. I think we may go mildly off topic and just figure out a couple laws to make it happen again. But no, I'm in Vienna and it's super beautiful here. It's a very pretty city, but honestly, Prague is equally as pretty.
All right, so tell me what you're doing when you're not resurrecting empires. Like, what's the, how did you come to co-found Quasar?
Yeah, I've been in crypto since I'm 16. My parents come from Eastern European countries, so they grew up in communism and socialism systems. I was fortunate enough to be born in Germany. So from a very early stage, from a very early age, I felt like I need to figure out kind of how money works. Like the system is novel. My parents didn't grow up in this. They didn't have the expertise to share with me. I need to kind of figure out how this works. My dad has been deep in philosophy, so I grew up with philosophy. He actually published a book about it as well for me. And then on top of that, I turned into a nerd. When I was 12, 13, I started playing Counter-Strike. So I was playing the German championship in Counter-Strike actually as well when I was 16. So
Pro
when
gamer.
I found about...
Okay.
Yeah, well, I had a hand injury, so the classic, soccer player about
the
to
RSI.
make it, but exactly. But if you look at tech, philosophy, and money, when I found about Bitcoin, I pretty much dropped anything I was doing, and I was like, "This is it. This is what I'm kind of gonna work
The
on."
ultimate nerd's night.
Honestly, yeah, it was like a gift from heaven.
So is Quasar your first sort of protocol, or did you start somewhere else?
So I did a lot of stuff in crypto, but this is definitely my first protocol. I started off as a researcher in kind of a little boutique research company in Germany, writing some articles about crypto, especially in the context of enterprise adoption. And least read articles across the board until something weird happened in the later half of 2017. Suddenly, the most read articles. So that was fun to witness. And then I worked for a company called Real Items, which launched the second ERC 721. Launched basically, so immediate NFT application for supply chain management. So, not PFPs, but like actual tagging of real items. That was very cool. I did this as a head of product. And then after I was working at Real Items, I actually co-founded Atlantic Ventures, which was a research and advisory company for emerging tech, specifically blockchain and green tech as well in Germany, where I had like a monthly workshop with the kind of digital leaders in the DAX companies, if people know about it, DAX and MDAX companies, and kind of, teaching them how crypto works and giving them like a safe space to ask questions they were embarrassed to ask anywhere else. And then from that, started Quasar with my co-founders, and that's where we are today.
So tell us about Quasar. What does it do, and why is it, what's the USP of Quasar? What is the only possible on Quasar for me?
I like to start a bit philosophical. I don't know how often this happens here, but when I look at
more often than you think.
Perfect. I'm gonna keep that train rolling then. If you look at capitalism and Western philosophy of capital and money movement, the first word that we use to describe it is free market. But the more you look around, the less free you realize the market actually is. First things first, you have entries of barrier by capital allocations. So for instance, you cannot invest with a hedge fund because they need at least $500,000, right? So if you don't have that, sucks to suck. If you are in some countries that have accredited investor rulings, you cannot legally invest in private entities because the government deems it not safe for you. You can gamble, but don't you dare invest in early stage private companies, right? So you can't even invest into that. And then if you were outside of the Western bubble, you can't even that easily buy Western stock. Like a kid in Nigeria cannot buy Apple stock, right? Even though he can be 100% certain that this is going to improve his financial situation, he's not allowed to buy it. I was always very bothered by that. Again, from the history of my parents as well. I never liked being told that I can't do anything. I may or may not have been banned from PayPal because I had it when I was 12, right? So there's like a sense of I don't like when there's barriers put up, especially if it's counterproductive to the actual underlying what you're trying to do. which is, well, in a free market, you're trying to attract capital and deploy it efficiently, right? So why would you ever discriminate against capital? So if we look now into crypto, we see a trend that has happened with literally any market in the history of markets, which is in the beginning, it's an unsaturated market, which means anyone can create returns. DeFi summer, gold rush in California, you name it, honestly. And as a market matures, it gets harder and harder, and you have kind of this disconnect between like the experts and the average population when it comes to just how much resources you need to be able to outperform and how much knowledge you need or how much just anything honestly you need to outperform, and commitment as well. And we've reached a stage in crypto and DeFi where I feel like we've gotten to that stage. We're moving into that stage. You need to really know what you're doing to outperform, you know, staking yields. A lot of risks are just not very obvious for users. And so when I look at DeFi and crypto, I feel like we should never forget where we came from, which is permissionlessness, non-custodialism, and like global access to this financial market. Like this is supposed to be something that you're not discriminated against, no matter your age, race, country, whatever. But if we now want to take this into a realistic model, we also need to kind of figure out a way, well, how can we have capital deployed by like experts and kind of guided by experts, but like not lose this ethos. Like that is the conundrum, right? Like how do you take expertise and have a non-custodial, non-permissionless way to like have that guided and a compliant well as well? Like, you know, I like the United States. I would like to fly to the United States without being picked up at the border. So compliance is a really big aspect of this as well. And that's where the USP for us lies. Quasar is essentially a platform to execute off-chain computation on-chain in a non-custodial, permissionless way. So it sounds very contradicting, but you can essentially have data feed from centralized off-chain sources, guide the deployment of your capital without those data feeds ever being the custodian or the money manager or the asset manager of your capital, and vice versa, without you ever losing custody of your funds or access to your funds. And there's a lot of protections on place too, which are an open source on-chain aspect of our infrastructure to ensure that people don't need to trust, but they can verify.
So are you guys running this as a L1 blockchain, or are you guys, you know, running on some other infrastructure? What's the nature of the computational system? Yeah,
so we are a Cosmos SDK L1. So we have our own chain. The chain served a purpose in our legacy design where we essentially advanced ICQ and ICA on IBC. So interchain accounts, which is essentially an embassy model, right? So you can have a chain can have an embassy on another chain, and ICQ, which is just queries, honestly, over IBC. And we showcased the first smart contracts ever in crypto that executed on a chain they were not deployed on. So our smart contract vaults were sitting on Quasar, executing on Osmosis. Now, granted, this is where I have to immediately preface this. It was a horrendously unstable design. There's a reason I'm calling it legacy. That design was not sustainable long term. You know, IBC was designed to send around letters. We were asking it to send around cars. The infrastructure was just never built for that. So in the current design, what we have is the chain acts as a centerpiece, and we have outpost model smart contracts on the destinations of the strategy. So for instance, we have contracts on Osmosis right now. We're about to launch contracts on a couple other chains. So that's the current model.
So you guys already passed, I believe Osmosis is permissioned, right? So you passed governance on Osmosis to deploy the Quasar contracts.
Yeah, in fact, there is a very crazy kind of thriller story when we were launching in March of this year, where we passed the first expedited proposal on Osmosis in the Osmosis history as well. 80% of all tokens voted, which is like $2.5 billion of value, like 25,000 accounts voted, because we needed to pass a parameter change that wasn't included in the Osmosis upgrade at this point, even though it passed governance to be included. So yeah, there was some very crazy stuff, but we have a whitelisted address to deploy on Osmosis.
So take me through how a vault works on Quasar. So you mentioned a couple of things, you know, cross-chain strategies. You mentioned Osmosis. So obviously there's, you know, some logic connecting via IBC to Osmosis and doing something on the pools, but it's still very sort of foggy for me. So yeah, I've looked at your website and it says there is a USDT USDC pool or an AXL USDC / something else pool. Yeah. So, you know, if I deposit liquidity into these pools, what happens? Yeah. Why am I doing that?
Gladly. So let me go off from like the flow of a user quickly and then go into what happens in the backend. So currently, all our vaults on Osmosis, which means if you have your capital on Osmosis, you can just stay on Osmosis. You don't need to change anything with IBC. If you go to the Quasar frontend, you can see different pools that we're deposited into. imagine this. A lot of people know about account abstraction as a new concept. It's essentially an account abstraction way of having dynamic liquidity provisioning, right? So our smart contract is attached to a singular pool. So it's not, it has no right to change the pool. It has no right to change the asset, the assets that are in the pool. The only thing that it can do is change the range and pull it out or put it back in. Like that's the only functions that a vault at this stage has. So if you deploy into a vault, you need to have the right asset location. That's because Osmosis doesn't have single-sided deposit yet, but that's coming soon. And then the vault takes your capital and puts it into the range that it's deployed into. Actually, depending on when this launches, this live stream, or I guess this recording, we're going to have a feature called multi-range, which means a singular vault is going to hold multiple ranges in a singular pool, which at this point we are playing with the exact same tools as the most professional market makers, where you have various allocations and ranges within a singular position.
So let me go back real quick and make sure I understand the whole flow, right? So I'm a user, I connect on Quasar with my wallet, and I deposit into the wallet on Quasar, and it will move it's able to move the funds via IBC to Osmosis.
No, so that used to be our legacy design. The current design is you have your assets already on Osmosis, and you're just interacting with a smart contract on Osmosis. Right. The chain currently is on a transition period to a new kind of playing a different part in the future of Quasar. We'll get to that in a second as well, especially when it comes to the multi-destination part. But for now, if your assets are on Osmosis, you just stay on Osmosis, you deploy on Osmosis.
Okay.
Exactly.
Okay. But I put so the assets I have on Osmosis, I put them in some sense under the control of the Quasar Vault.
Yes.
And the Quasar, you said, the Quasar Vault can do two things. It can either deposit liquidity into the Osmosis pool. So each vault is coupled with one pool, I'm guessing. So this
for now, the next feature is multi-range, which still stays like this, but then we have multi-pool, where the same assets. So for example, if you have 3 fiat pools for Atom Osmo, it can move between those, but it's still bound to the underlying assets.
Right. Okay. But let's put that aside. So let's say we're in the simplest situation. Mm-hmm. So I've got my liquidity on Osmosis, and I'm sort of giving permission to the Quasar Vault to manage that liquidity. And the system can either deposit the liquidity into a pool, it can withdraw the liquidity if it decides to do that, and it can change the range in which the liquidity is provided on the Osmosis pool side.
Correct.
And current right now, that's what your vaults do.
Yes.
That's the functionality. Okay. Yes. So how do you determine the range? Who decides how to do that? I guess you have to optimize this somehow. So my yield makes, it's making me money.
Yeah. So there's two trains of thought here. One of them has been thoroughly played out, which is the on-chain strategy train, right? So if you have, if you look at Urine, if you look at almost all yield aggregators, there is specifically running non-dynamic on-chain strategies. What I mean by non-dynamic is they're not really upgrading those. They're not really adjusting to market conditions. There is a set conditions which anyone can read and counter trade. Right. There's a reason that Urine vaults make very, very bad yield, like just across the board, period. Because if you look at Wall Street hedge funds, there's a reason that they're so unbelievably stringent on never leaking their strategies, right? Their Python scripts, because that's the entire value prop. Like if anyone can read what you are intending to do, it's very easy to counter trade. So this is the first train of thought, which just has been done before. But there's a reason to do it this way, at least in previous DeFi years, which is it is a very easy way to decentralize, right? Here's the code, it's on chain, done. Now, if you look at Quasar, we've decided to say, okay, look, there's a reason that in finance, those Python scripts are closed source. There's a reason that they outcompete, because that's just the only way. If it's secret, in military applications, you don't leak your entire, tank design to the enemies. Why would you do this in strategies, right? So we were looking at this and saying, okay, how do we onboard traditional finance workflows, which is Python scripts, which is off-chain computation by design. Like they don't have such a thing as on-chain computation, and closed source, and have kind of this layer where we make it crypto applicable. So here's what happens. Our vaults are written in CosmWasm, which means that they're upgradable, right? So there's an admin account, which is a multi-sig, controlled by a Swiss association, which is incorporated in Switzerland and bound by its bylaws to execute on-chain governance. So that's that stage. So there's no discretionary actions taken from that side. Then there's a different account, which is called a range manager. Now, the range manager is the one that a strategist or a data provider interacts with, which is essentially sending the vault signals to execute new ranges. We have our custom front end internal tool, which we're actually thinking about publishing soon as well, but that's to be seen, where you can have trigger prices, volatility adjustments, amount of swapping. Like you can basically customize as professional as anyone else could how to do a rebalance, how to do a range update. So what now happens is you have a strategist and you have the vault. But how do you connect this? Like that's the crux, right? Because a strategist is not a custodian and not an asset manager. That's like the entire point here. Otherwise, we're just rebuilding TradFi. We might as well apply for a license.
There's like the yield generator or something. They're responsible for the yield only, not for the sort of size.
They are providing suggestions on how to rearrange, right? But it's because it's not a custodial product, the liability doesn't lie with them. Right. So you're not giving them your money and they're like doing stuff for you. They're suggesting to the vault what it should execute. So if they do a suggestion like this.
And this is, by the way, I was looking for a good place to ask this. The range manager is only able to adjust the range, but it can't control the amount of liquidity in the pools. That rests with the other multisig.
It cannot, the other multisig can not, so none of the multisigs control the liquidity in the vault itself. That's only based on deposits and withdrawals of users,
depending on what they deposit and remove.
Absolutely.
Okay.
Absolutely. But the range updater can only pull liquidity, pull it in, or rearrange. But obviously, we're going to get to this in a second, you can technically still do some bad stuff with rearranging, but we'll get to this in a second. So let's look at this now. You have a USDT USDC vault, and it's trading at 1 and now you want to switch the range to 1.0001 to 1.0000, right? Okay, cool. You change it one tick, you change it a singular, fine, sure. The data feed is being sent to a server that has a multi-verifier and acceptance stage. So you have the Quasar Association, this aspect, which this design is changing very soon, but I'm telling you how we're doing it right now. Looking at the proposed range. The entire design is that there is no discretion. We are not strategists. We're not pretending to be. We're not the experts. The only thing we're checking is this a valid range? Valid meaning you can rug with the range. Let's say you have a vault like USDT, USDC, and someone proposes a range to move it to 0.5 to 0.6.
Right.
Or that should never happen. So that's just not a valid range, right? So we're verifying is this a valid range. As long as it is a valid range, which is zero discretionary, it gets approved by a multi-sig. Then it gets sent to a middleware contract that our vault's interacting with, which is going to check, can I execute this with the proper slippage? How many transactions do I need to split this up? So the slippage is the lowest amount and price impact is the lowest. And then execute and run it through. If any of those steps fail, even once, it's all deleted and goes back to not happening and back to a new proposal. So we are always leaning on the conservative side of not executing rather than executing. Right. So how are we going to move this system? Because right now, the human aspect is not ideal, right? It may not be discretionary, but preferably we don't have the human layer in between. So we're going to move to a system launching literally in like 2-3 weeks where we have a validator pilot program, where validators are going to act as the verifiers. The data provider acts as a proposer, and the validators act as a keeper network, essentially, just verifying if this is valid. They may even run code at this point, because it really is not supposed to be any discretionary thing, just to check, hey, is this something that's deviating less than X% from the current range? There's going to be different risk adjustments based on different asset correlations, of course. And if it is, then it gets sent through. The middleware contract is going to get even fatter as well. It's also going to do another check of verification. Like we are very more on the paranoid side than not here. So do another check of verification. If that passes, then it's going to go back to the, can I execute it with the slippage? I said, can I execute this with how many swaps? And then execute it on chain in random intervals as well. So you can counter trade the actual style and buy orders.
So in some sense, you're replacing the, let's say, arbitrary sort of multisig committee, diligently picked, obviously, by the proof of stake weighted validator set. That's basically
correct.
The verifying this based on consensus.
Correct. The end stage of what we're moving to, which we're kind of targeting end of next year to have, is every single validator of the Quasar chain running code that does automatic verification based on whichever validator verifies code the fastest or the best or with the highest quality gets paid out in Quasar. The step of verification and the contents of the verified range updates are going to be posted as transactions on the Quasar chain as a singular ledger to all the different transactions that have been approved, and as a way to look back into what has been executed. And then those signals are being sent to the outpost contracts to be executed.
And who decides what an acceptable range for the liquidity is? Is there like something like the equivalent of an economic committee on Agoric, which that decides which collateral can be used to mint IST?
Yeah, great question. So any data provider or strategist generally actually wants to lean into having this governance passed. They actually also don't want the discretion, right? Because we are kind of, they don't want to be like, we're not saying, hey, this is your asset manager. Like they're not, right? So depending on the asset pairs, there's different parameters. For example, USD to USDC, you should never be able to move your range more than 5% out of range. Like never. That should just never happen. However, if you have an asset like, let's say, TIA USDC, right? Where TIA just like rips 7x in like a week. So you have a volatile to non-volatile asset correlation. You may have more lenient ways to adjust the liquidity. Exactly. But I think you can definitely automate that. But I think in the early stages, it's going to be a governance process just to kind of get to where we want to actually automate it.
You could grab some price feeds and then build a dynamic range around where the markets are. Yeah.
But you know what happens then? This is actually one of the reasons why our vaults are off-chain computed, is you can abuse that system. I mean, how many Oracle hacks have happened? How many different, price feed hacks have happened? Like there's been just recently a situation where ST Atom, which is staked Atom, has a very clear redemption rate. Like you can go to the Stride fund and redeem your ST Atom for Atom. So there's a very clear price that it should be, right? And there was an attack on Osmosis, I think it was an Oracle attack, where the price of ST Atom briefly dipped 10%. Now, if you are in a Yearn-like vault in this moment, you are about to have a very bad day. Because the Yearn-like vault is going to not be able to read the redemption rate data. Otherwise, it will use the Oracle that was just hacked, right? So it's going to rebalance down the 10% and then back up to 10%, meaning that you lost 20% in impermanent loss, just like that, to an asset that should have never rebalanced. We had a situation in our vault where we once had a big deviation from the redemption price to the actual price, and there just hasn't been a rebalance. Sure, you may be out of range for a while, not earning yield, but at least you're not realizing losses up and down in an asset that you shouldn't have to rebalance. So there is a real benefit in having this off-chain mode. And the real kicker is actually executing it on-chain in the permissionless decentralized way.
Are you guys able to incentivize the strategists that are, proposing the range changes to do this efficiently? Because I can imagine, there's a team of 3 guys rotating 24/7 and they're each monitoring the market, or it's just me and whenever I get up, I do some adjustments. So, how do you guys distinguish between these?
So the quality of a strategist is obviously a gigantic part of the protocol. So right now we have one, we are interviewing 2 other ones. It's a process that we are not rushing, because I believe that if it comes to our front end, at least, it's not the more the merrier. It's the better quality, the better, right? So you really need to look out for the strategist. So right now it's a permission system. We need to pass governance to be approved. We usually have some standards internally about doxing, their identity being real, them being public facing figures potentially. So there's reputational risk that they're exposed to. So it depends on the strategist, and we're not discriminating on how they work internally. We're making sure that there is some sort of stake that they're at. It's not a 5 anonymous team that we have no idea about, never met, no one knows them. That may not be something we want to put into our front end for the time being. The biggest incentive for them is obviously performance fees, right? Automated performance fees that are made on the vault. So if they perform well, they make more, they get a bigger share of the profit. So that's, the easiest incentivization in the world possible. However, we do have plans to actually make vault deployment permissionless and our front end permissionless, but only for managing your own positions. So we're going to start off in the middle ground where if you are a very kind of expert trader or a very active DeFi user, we undeniably, unarguably have the most advanced tool to manage LP positions in Osmosis right now. Our internal tool combined with multi-range, which is launching in 2-3 weeks, is undeniably miles ahead of anything else you can do in all of Cosmos with LPing. So if you're a power user, you may be very interested in just using this for your own liquidity. So not even opening it up. Obviously, though, this is kind of the first step that's going to lead into a future opening up where we're going to have to come up with a rocket pool-like method of collateral that needs to be locked up in Quasar token to make sure that, you can have your collateral and underlying burned if you...
Slashed.
Slashed.
Right.
Exactly.
Mm-hmm. If you want to open the pool up to the public, you have to put up,
exactly.
let's call it a
If
bond,
you do it personally,
right?
we don't need it. Right. Exactly.
Right. So, I mean, these are all interesting changes. Are there any other upcoming sort of, milestones or events that impact Quasar?
Yeah, totally. Osmosis is our home for now, and we love Osmosis. We've started Osmosis. We've always been very Osmosis aligned. But we have a mission coming up. In January, we're going to release a Quasar 1.0 paper, which is going to outline that we're going to turn into becoming Yoda and targeting Yoda. Yoda meaning yield, origin, and destination agnostic. Mm-hmm. So the entire point is we are not an Osmosis yield aggregator. We are going to be a co-processing chain for executing off-chain computation on-chain in a permissionless, non-custodial way. Like that is the Quasar vision. It should be independent of Cosmos or Solana or Injective or Ethereum, and it should be independent of DeFi primitive being a DEX or lending and borrowing or leveraging or anything else. Like it's supposed to be a tool that anyone can use to either manage their own liquidity or create public-facing vaults, right? So next year is going to be a lot in our side with the automated validated keeper network that I mentioned. Just really being best in class in that infrastructure side of things, because this is one of the unique products where you can't really fake it till you make it. Like you are starting off with very big things and like big risk factors. So auditing from the get-go, keeper network from the get-go, like a lot of advancements on the infrastructure side, and then obviously on the product-facing side, more destinations, more IBC capabilities, multi-pool, multi-range, multi-destination, multi-DeFi primitive. So essentially having the vault infrastructure be as composable as you could want to have it. Like, hey, do you want to create an ST asset, non-ST asset vault share that now is auto-compounding the rewards, and now it can be used as collateral, so you can loop it in a lending market to 3x leverage it? Here you go, right? You can do this. Or hey, do you want to borrow USDC on Aave in Ethereum because the rates are so much lower, and use it to deploy it in Mars where the rates are higher, right? So there's like there's a lot of things and a lot of levers you can pull, and a lot of inefficiencies across ecosystems that need to be connected with IBC that we are just super excited about.
So what are the most interesting destinations you guys are going to be IBCing into?
Mm-hmm. Ethereum is the big one. So there is a team called Union working on Ethereum IBC. When I say this, I mean literally a native IBC connection to Ethereum. So any ETH asset anywhere in Cosmos and any Cosmos asset anywhere in ETH. So that's going to be the big one, because at that point, if you look at Ethereum, it is the king in TVL, but it is the loser in returns, simply because it's such a mature, saturated market. So to be able to build a permissionless or trusts minimized bridge from Ethereum to Cosmos is going to really open the floodgates to get yields, in a more balanced state, and just be able to use more of those new opportunities that Cosmos is providing to ETH liquidity. Vice versa, ETH has a lot of blue chip assets that Cosmos liquidity may want to flow into. So that's like the big one for us for the next year. Obviously in Cosmos, there's a couple of destinations we're excited about, but given that we're in conversations with them, I don't want to front run that.
Okay, so we'll be excited to see what comes next and which ones you're going to bring on. I'm definitely interested in what's going to happen with opening up to ETH and bringing it via IBC. So what you're saying is Quasar will have a channel to Ethereum to move ETH back and forth.
The team that is building out ETH IBC is run by a very good friend of mine. We used to live together as well. We are very closely aligned. We have weekly calls. We are very much on the kind of, hey, day one support kind of mission here. Because again, the Quasar mission is capital should move freely, right? And it should be guided by experts. And that means that we need to abstract away IBC. Like the entire Quasar team, all 13 of us are absolute IBC nerds. Like we love this shit so much. And we just think it needs to be everywhere. But the users and also asset managers don't really care about that. They just want to have it work. So ETH IBC is like the biggest upgrade for us, because simply at that stage, look, the gas fees are higher. That's for the strategists to figure out. It's not the candy land. There's a reason people move to other chains and other L2s and stuff. But it is the big guy. So having connectability there is going to solve a lot of issues of what you can do with that vaults.
100%. Well, all the best to Quasar in 2024. Excited to see all this stuff coming up.
Thank you.
Thanks very much for coming on. It was a really cool chat, Valio. Hope to see you back after some of those upgrades go live.
Thank you, Ship the Code. I appreciate it. And cheers back to Prague.